whether or not there's a play to shut down parts of the bank that are particularly dangerous or concerning, either from an operational or a regulatory perspective in the short run, but get exposure to the technology and then build back out the banking functionality over time. So I think there are a lot of ways to get creative with the assets there. Again, just taking a very high level approach without knowing what's potentially in there when someone's doing full due diligence.
Welcome back at Market Empire, your partner giving you your daily dose about the latest crypto news and thoughts of different analysts and investors. Watch it till the end of the video. After FTX's collapse in November, experts warned of a contagion, or the damage that the collapse of the crypto exchange could do to the sector as a whole. After FTX itself, Silvergate, a bank in California that has become the financial backbone of the crypto industry, may be the biggest loser. In this video, Seth Jins will talk about the crypto bank crash. Seth is in charge of liquid investments, is a managing partner, and is one of the most important people on the venture investment committee. He has worked on Wall Street for 20 years and has been very involved in the crypto community ever since he invested in Coinbase as an angel investor. Let's watch the video and listen to Seth talk about these issues. Make sure to click like, subscribe, and post notifications. Enjoy.
Obviously, the Silvergate network then was used to move funds around 24/7. It was a part of the infrastructure mosaic that was important. I think that component has real value, the connectivity into the crypto ecosystem. So it will be interesting to see whether a larger bank sees an opportunity to consolidate here with a much more diversified deposit base, where they're not going to be as dependent on what can be quick inflows and outflows associated with the crypto economy.
Well, my guess is that Silvergate's taking their calls right now, if they're
That's right.
If they're being made.
That's right. I think the message that we continue to hear from the traditional finance community writ large, and again, plenty of exceptions out there as well, but generally speaking, there's a view that crypto is here to stay. It's going to be an important growth sector from a technology and innovation perspective. So it would shock me if there wasn't a larger depository institution out there that saw this as an opportunity to very quickly bootstrap connectivity into the crypto ecosystem. That said, there could be a lot of things that we don't know yet. So someone in there doing full due diligence could see things that make them not want to engage until it's in receivership. So I don't have any non-public information, I should be clear, on that situation.
Well, I definitely don't have any non-public information, but one bit of information that is public is, quite frankly, the space right now probably looks very toxic to regulated institutions based on some of the regulatory headwinds that we've been talking about here on this show. Do you think that might be a factor with a strategic investor or potential buyout partner, again, stipulating that neither of us have any public information?
I think it's clearly one factor, and then the other factor is taking a view on the likelihood of those dynamics remaining in place for the medium to long term, which I would take as low, and whether or not there's a play to shut down parts of the bank that are particularly dangerous or concerning, either from an operational or a regulatory perspective in the short run, but get exposure to the technology and then build back out the banking functionality over time. So I think there are a lot of ways to get creative with the assets there. Again, just taking a very high level approach without knowing what's potentially in there when someone's doing full due diligence.
Okay, one crypto native company that hopes to fill the void in the US crypto exchange space is, according to its chief legal officer, let me just read this again. Its chief legal officer, this is Kraken we're talking about here. The chief legal officer of Kraken told the Block, quote, they're very much on track to launch very, very soon its own bank, close quote. So the chief legal officer of Kraken telling the Block that they are intent on launching their own bank, quote, very, very soon. This despite a tough regulatory landscape, which Kraken's chief legal officer has conceded. It also comes after Kraken's recent settlement with the U.S. Securities and Exchange Commission, which saw Kraken shut down its staking as a service product and pay a $30 million fine. Seth, any thoughts on this, the idea that Kraken may be jumping into the banking business on its own fairly soon, according to the chief legal officer over at Kraken?
Yeah, I don't have I don't have a lot of information on this. This just hit a little while ago. What I'd say is, my guess is if they're going for a federal charter, it could be a difficult environment for that right now. At the same time, I think it's important that those dynamics are tested. So they're probably not going for a federal charter, but again, if they are, what it will do is take that dialogue out into the open. It will bring in the engagement of people in Congress, other regulatory agencies, and I think it will bring together a healthy dialogue around what's important at crypto exchanges in order to qualify for a federal banking charter. So I think from our perspective, regulatory clarity is very constructive. That's very much the view that Brian Armstrong has been out over the last few days talking about as well. There's a desire to engage, a desire to have a dialogue, and a desire to get more clarity. And I think what we're seeing right now is some initial pushes by regulators that are going to be met with responses. There are going to be various institutions like Kraken that want to test what those regulatory decisions actually mean, what degrees of latitude they have. And I think all of this helps to define what regulatory environment we're working in. And it helps to mobilize more resources to try to get better clarity around how people can operate in crypto. So again, we believe a crypto with a well-defined regulatory regime, one that's thoughtful, is a much larger addressable market. So we welcome more clarity.
How do you feel about Seth Jin's assessment of the cryptocurrency banking system? Post your ideas in the comments section to share with us. Don't forget to subscribe, hit the like button, and enable post notifications. Thanks for watching.